Yeah.
Can you tell us a little bit about your background?
I was in juvenile detention. Yeah, I was in wealth management for a long time. So I was in financial planning, and I was a football player. So I'll start from the beginning. So I was a football player, athlete. I mean, that was all I understood about the world. I really was like, anybody ex-military, military in here, anything like that? Any athletes in here? Like surf? Well, I was a professional athlete. So like in my life, I couldn't see past sports. It didn't exist. So I didn't have any other skills. Business skills, let's say. So my whole, and I grew up in a middle class family. It wasn't like we were wealthy. My parents never talked about money unless it was negative. Turn the water off, turn the electrical off, don't do that, don't do this, don't do this. Like my parents came from nothing, so it was kind of, great for them, but it was also very hard growing up in a household where everything was a cost, right? So I had a very weird relationship with money. I didn't understand it. It scared me. $2,000 here, $1,000 here. Like I just didn't understand how it worked. So I'll give you some psychology in this. So I'm actually married to a therapist. But I'll say so somehow I found her and she found me and all that, right? But one of the things about it, so she specializes in ADHD and anxiety. Okay, and usually they're intertwined. As an athlete, I was definitely ADHD and definitely had anxiety, but the way I channeled all my energy was into the thing. That's why nothing past it made sense. So anyway, very impulsive behavior, but very luckily I was very athletic and that was what was my world, right? So once that ended, I literally had nothing. I felt like I had nothing. I felt like I was 18 years old and I was 26. So I was like, well, what scares me? Well, it's money. So what am I gonna do? I'm gonna become a financial planner. Then a financial planner. So that's how I started working. And I got into financial advising, insurance, sales, this and that, whatever. And that's what I did for a long time. I learned the language of money. I read a book of there's two quotes I'll tell you that changed my life when it comes to my background. The first one is, everyone who's read Rich Dad, Poor Dad? All right, everyone's read it. Okay, there's one quote in that book, there's one question he asked his rich dad that I just think about. It's never changed. I was 18 when I read it, I still think about it. And it was, poor dad says I can't afford it. Rich dad says what? How can I afford it? Okay, so poor dad says I can't afford it. Rich dad says how can I afford it? Blew me away, still blows me away. So I think about how can I afford it? That's the first one. The second one, I learned that money is a tool. Okay, so when I got into financial planning, I realized, well, if I use money to get, and I'm paying investors back and the bank back money, and they're getting return on their money, they're gonna give me more money. So if I'm able to use money, so how does the bond market work? Well, what the hell is a bond? Bond is a debt instrument. Okay, what's a stock? Stock is an ownership instrument. Okay, how do they intertwine and work? So for me, financial planning and wealth management wasn't, now, knowing somewhat about my personality, you probably imagine I wanted to know how every piece of bond worked, what the bond market does, and the stock market does, and who does what, who buys what, who sells what, why it happens, and where money flows. Okay, what's the Federal Reserve? How do interest rates work? How does that affect the economy? What is consumer confidence? Why does that affect the economy? And all these different things that come with the obsession of anything. So I got into that world. I did that for long enough time to realize I didn't like it. Okay? Because what was I doing? Most of the time, I was investing other people's money, but I wasn't an investor. Okay? I wasn't an investor. I wasn't. And if you're investing in stocks, bonds, mutual funds, those things, you're passive, and that's okay. But it's just okay, what are you investing in? What is the fund in? What do they invest in? Okay, who owns that fund? Who's the principal of that fund?
Right.
I sell life insurance. Right? So I was I sell someone a term policy of $100 a month, and you get $1 million insurance, whatever, $500,000 insurance. I'm like, how does that happen? How does an insurance company operate? What are they investing in? How are they getting enough return to say, yeah, if you die, here's $500,000 to that person? Well, it's risk. Okay? It's risk. How many get paid out? How many don't get paid out? What are they backed by? What's insurance? What's reinsurance? I'm boring you, but this is okay. So then what I had the opportunity to do is take over a hedge fund that was effectively hemorrhaging money in San Diego. So this is like 8 years ago. And it was like, roundabout way, I was like, okay, I'm not loving financial planning, but like the hedge fund world is very interesting. Sounds sexy, sounds exciting. The hedge fund was a fix and flip hedge fund. So I brought in all my sales experience, because at that point I was training out of insurance brokers, about 45 agents. So I was like training agents and doing all that. And then it led me into hedge fund world and the institutional financing, and also networked. I really got networked through that space, people who had capital, had resources, and like knew what the hell they were doing. But I realized that the field operations were a complete mess, because it was a fix and flip fund. We were flipping about 180 houses a year. And it was just very messy. You can only imagine. Flipping one is a lot, let alone that many properties. And then what I realized over time was how much money you had to have to not make that much in that model. So then I was like, well, there's gaps in the financial model. How do you solve those gaps? Well, the gaps are like, well, how do you remove risk? How do you bring it in? How do you do deals in a how do you make profitable properties happen and remove yourself from most of the risk? Like, isn't that the home run from anything? You can make X amount of dollars and not have the risk in it. Isn't that like, well, yeah. So what does it take to get there? So then, there's my background.
Yeah.
So like now I've been started this company just over 3 years ago, but prior to that I had a couple other companies and a couple partners and different brands and all that stuff, but like effectively always in the same space, which is investing, right? To me, real estate's the asset class. If it was a bottle of water tomorrow that was making more money and I could understand it, well, I'd be selling water. You know what I mean?
How do you feel about buy and hold? Like, you incorporate that as part of your strategy as well?
Yeah, I own a fair amount of properties. I don't love holding real estate, to be real with you. I don't like the illiquidity of it, I hate it. It drives me absolutely nuts. At the same time, I'm not gonna be flipping houses and wholesaling houses for 50 years either.
Yeah.
You know what I mean?
Yeah.
So I hold, I sure kept like 12 million in real estate. If we can keep 12 to 15 million a year, I'm pretty happy with that, considering. Doesn't mean it's forever, by the way. Some of these deals, I might hold it for 2 years, 3 years, 5 years. I mean, I think, I look at investing as like, you guys are at a fix and flip event, right? There's fix and flips. Okay, you might go to a buy and hold thing. You might go to commercial, you know what I mean? Like, whatever. I look at investing as, who cares? Does it make money, does it make sense, and do you understand it? If you decide you're only gonna flip, you said you're only gonna hold, just do what you're good with, right?
Mm-hmm.
So how do I feel about it? Depends on your appetite to hold property in what areas. I look at holding, the only part about holding I don't love, well, they say there's a lot of parts I don't love. You're never gonna be really positive cash flow in California. Like, that's like a fallacy, like to buy a bunch and live off it. Now you can in 25 years if you pay them all off. You know what I mean? So if you have enough active income to pay down all your debts on the lease, the rental side, dude, like, do it. You know?
Mm-hmm.
But if you don't have enough active income, like, you're just gonna be holding liabilities over and over. Like, I don't know who holds real estate in here. It's not cheap to hold real estate in California. It's not cheap to hold anywhere. Like, I just went over property taxes and stuff. Like, I have some huge bills this month in property tax from all the properties I own. I'm paying just for the tax, just for the right to own the place.
How much?
More than one time. Annoying amount. Very annoying amount. Like, way too much. And then all the utilities and all this stuff going up. So I would just say, like, how do I feel about it? It depends. And it depends on how many doors you have. It depends on how capitalized you are. You know what I mean? It depends on a lot of things. It depends on the area. So I would prefer, if you're like whoever's holding, to not go out of state and try and hold something because it's cheap. Because, like, dude, that's a death sentence to me. I think if you're gonna hold, know you're gonna be negative cash flow and hold in the appreciating area. Don't think about how you're making money today on it, but you're like, 10 years in this part of North Park, I'm okay. You're gonna be okay. Doesn't mean you buy it at market value today. I don't think so, no. I mean, depending on how much you're putting into it and all that, but we all know 10, 15, 20 years, certain parts of San Diego that It is what it is.
Right.
Unaffordable, it's gonna be challenging, all that stuff. It just is what it is.
Yeah.
But I don't love living off debt and refinances. I don't love doing that either. I hate that model. This whole like buy, rehab, refinance, do all this stuff. It's like, dude, what? It's tax free. It's fucking debt, dude. It's no matter how you slice it, too much debt is bad. I don't. So I just look at it as like, buy the things that you can make sense of, that you're okay with stomaching the debt, but to live off a refi and to think that's income is absolutely bonkers to me. It's not, unless you're really well covered and you have multiple doors to handle it. So I look at flipping as a cash business, and there is profit that has to be made for those deals to work, period. And wholesaling and brokering loans, whatever, all that is its own thing. It's unrelated to long-term holding and all that stuff. It's unrelated. For my business and myself, it is like, I think about what I really do all day. What do I really do all day? I do my own financial planning. I do the wealth building for the company itself. That's what we do all day. I don't do anything else. It is strictly financial planning. I have entity structures, I have taxes, I have insurances, I have all these different things, and they all go in different buckets, and they have to make sense for different reasons. That's really all it is.